Although the headlines today are dominated by President Trump's latest tariff offensive announced yesterday, 25% duties on heavy trucks, 50% on kitchen cabinets and vanities, 30% on upholstered furniture, and an eye-popping 100% on branded pharmaceutical drugs unless companies are building plants in the United States. Something quieter, but perhaps more consequential, is unfolding in the background. According to the U.S. government's own data, major foreign players are now diverting their investment away from America. Before we get to the heart of that story and the countries involved, it's worth stepping back to understand the role of global investment in the U.S. economy and how that steady flow of capital has allowed the country to thrive for decades. America's most powerful weapon has never been a tank, a jet, or even a missile. It's been its ability to borrow. For more than half a century, the U.S. government has run deficits almost every single year, piling up obligations that no other country on earth could sustain. In 1980, the national debt was just under $1 trillion. By the year 2000, it had climbed to $5 trillion. After the financial crisis of 2008, it doubled again, crossing $10 trillion. The pandemic pushed it past 20, and in 2025, U.S. debt is over $35 trillion and still rising. This debt machine has been made possible because the rest of the world kept buying America's IUs. US Treasuries became the cornerstone of global finance, the ultimate safe haven, the instrument everyone trusted. When the US spent beyond its means, foreigners absorbed the excess. And no one played that role more dramatically than China. From the early 2000s through the 2010s, as America bought Chinese goods by the shipload, Beijing recycled its surpluses straight into US government bonds. At its peak, China held more than $1.3 trillion in treasuries, making it the single largest foreign creditor to Washington. Canada, Japan, Brazil, and dozens of others followed suit, building portfolios of American debt that together accounted for nearly one-third of all outstanding U.S. obligations. It was a strange symbiosis. America ran deficits and the world funded them. America consumed and others produced. America printed paper and others treated that paper like gold. The system seemed unshakable. But here's the problem. When debt keeps rising and politics turns hostile, creditors can change their minds. And that's exactly what the latest U.S. Treasury report covering July 2025 just revealed. In July 2025, three major economies, Canada, China, and Brazil, unloaded treasuries together, stripping nearly $100 billion out of America's debt market in just a single month. It was one of the sharpest coordinated retreats in years. This wasn't just a bookkeeping adjustment. It was a rebellion, a sign that the very nations who once financed America's rise are no longer willing to bankroll its future. And it comes right after President Trump escalated his second-term tariff war, slapping huge duties on imports from those very same countries. So to understand why this matters so much, we really need to step back and look at what treasuries have historically represented. For decades, treasuries weren't just bonds. They were actually the foundation of the post-war global financial system. Whenever crisis erupted, whether it was the Asian financial collapse in the late 1990s or the global meltdown in 2008, investors would flee into treasuries. They symbolized stability, liquidity, and honestly safety. Foreign central banks held them as the backbone of their reserves. Pension funds, insurers, and sovereign wealth funds treated them as risk-free collateral. That trust allowed the United States to finance wars, stimulus packages, and massive deficits without the constraints other countries usually face. By the mid-2010s, foreigners held almost a third of U.S. debt. The world in effect was lending to Washington at low interest rates, enabling the American economy to live beyond its means, while others took on the risk. China was the giant in this system. Throughout the 2000s, Beijing's surpluses just flooded into U.S. securities. This gave China some leverage, but it also tied it really closely to America's financial stability. Japan played a similar role, but China's holdings symbolized the paradox. The U.S. and its biggest strategic rival were locked together in a financial embrace. That embrace, though, has been loosening for years. After Trump's first trade war in 2018 and 2019, Beijing began gradually trimming its holdings. Still, in 2025, it remained America's second-largest foreign creditor. Canada, by contrast, was America's closest partner, a dependable buyer of treasuries, and a country deeply integrated into U.S. trade and finance. Brazil was smaller in scale, but as Latin America's largest economy, it mattered too. And then came Trump's second term, and well, his tariff earthquake. In April 2025, he declared a national emergency over America's trade deficit and imposed a sweeping 10% baseline tariff on nearly all imports. Layered on top were reciprocal tariffs, duties as high as 50% against countries the White House labeled unfair. Then came penalty tariffs targeting specific nations. Canada was slammed with 35%, Brazil faced an effective 50%, and China saw duties ratcheted up across critical sectors. The political pitch was simple: make America strong again by forcing trading partners to pay. But the financial reality was honestly much harsher. Countries that were punished on trade had every incentive to retaliate, not necessarily by announcing their own tariffs, but by attacking the foundation of U.S. power, its debt market. And that's what happened. The July 2025 Treasury report showed Canada's holdings collapsing from $438 billion in June to $381 billion in July, a massive $57 billion retreat. China cut from $756 billion to $730 billion, a $26 billion decline. Brazil slipped from $215 billion to $21 billion, trimming $14 billion, nearly $100 billion gone in 1 month, and all from the nations hit hardest by tariffs. This was not routine reserve management. It was retaliation. It was also risk management. Because if America weaponizes trade, what's to stop it from weaponizing finance? By unloading treasuries, these countries reduced exposure to a system they no longer fully trusted. For Canada, the move was stunning. Long, the dependable creditor, suddenly Ottawa was no longer willing to underwrite Washington's deficits while being punished at the border. For China, the symbolism was sharp. The one-time top holder of U.S. debt now trimming another $26 billion in direct response to tariffs. For Brazil, the cut was smaller in absolute terms but politically clear. If you shut us out of your market, we won't keep lending you money. So, where did the money go? Increasingly, it is flowing into gold. Across 2025, central banks have been on a buying spree. According to the World Gold Council, official sector purchases have already topped 1,000 tons this year, one of the largest annual hauls in modern history. China has been leading the charge with 9 consecutive months of acquisitions by July, lifting its reserves to nearly 74 million ounces worth about $244 billion. Brazil has quietly added to its gold reserves too, using bullion as protection against dollar volatility. Globally, central bank demand now makes up nearly a quarter of all gold demand, roughly double the share of the 2010s gold appeals because it can't be printed. It can't be frozen, and it can't be weaponized through sanctions in the way treasuries can. In an era when the U.S. is openly using trade and finance as tools of power, gold looks safer to America's adversaries and even its allies. Canada is the exception. Its official reserves show zero gold, unchanged from previous years. Instead, Canada expressed its frustration through treasury sales rather than bullion buying. Yet while Ottawa hasn't embraced gold, Canadian investors more broadly are showing diversification in other ways with large flows into foreign securities. Even as the government trims its U.S. debt exposure, the bigger picture is clear. America's debt is ballooning. Its foreign creditors are thinning out, and its rivals and partners alike are seeking alternatives, often in gold. For decades, foreigners bought treasuries unquestioningly, helping to finance U.S. deficits cheaply. But July 2025 shows that trust is fading. If that demand keeps weakening, Washington will have to pay more to borrow. That means higher interest rates across the economy, from mortgages to credit cards to business loans. It also means heavier burdens on taxpayers as more of the budget goes to servicing debt. What started as tariffs meant to help American workers could backfire, raising costs for American families in ways few expected. The irony is hard to miss. Trump promised tariffs would make America strong. Instead, they've given countries a reason to weaken the very foundation of U.S. power, its ability to borrow endlessly at low cost. So when future historians look back, July 2025, the latest U.S. Treasury report on foreign holdings may stand as a turning point. The month America's trading partners launched a quiet but powerful counterattack, not with tariffs of their own, but with a silent rebellion in the bond market. And the story doesn't end there. Because every ounce of gold China adds to its vaults, every treasury Canada sells, every reserve Brazil shifts into bullion, is part of a deeper trend. The gradual erosion of dollar dominance. Once confidence slips, once alternatives build momentum, the system never returns to what it was. The silent rebellion has begun. And the question is no longer whether America can borrow, it's whether the world will still be willing to lend. The story ends here, but my request begins. This channel has no sponsors, no safety net. It survives only because of you. If you believe truth should never be for sale, then help keep it alive. Subscribe, like, and share your thoughts in the comments. Every click is a signal that independent voices matter, that truth matters, and together, it's the only way this channel grows, and the only way truth survives.